The Wolf of Broad Street, and Gary. If you ever want to see the exact difference between building wealth and playing a high-stakes game of financial roulette, you just need to look at two people, Gary and Chloe. Gary was a day trader. His apartment looked like the control room of a nuclear submarine. If the submarine was sinking and the captain was drinking his sixth energy drink of the day, Gary sat hunched in the dark in front of 6 glowing monitors, furiously shaking a magic 8-ball. He was trying to decide if he should put his life savings into a new cryptocurrency called laser hamster coin. When the magic 8-ball told him, "Reply hazy, try again," Gary didn't take it as a warning. He took it as a sign of market consolidation. It was a buy signal. Gary's trading strategy was based entirely on vibes, panic, and whatever a 22-year-old in a rented Lamborghini yelled at him on TikTok. Earlier that week, Gary had watched a pigeon eat a French fry shaped vaguely like an upward arrow. Naturally, he immediately bought 10,000 shares of a potato farming company. They filed for bankruptcy on Tuesday, but Gary maintained that the pigeon was right in spirit. 3 miles away, living in a completely different reality, was Chloe. Chloe's apartment was bright, sunny, and smelled like lavender. While Gary was sweating over fluctuating red and green charts, Chloe was peacefully watering a fern. She was also an investor, but her strategy was radically different. She used a highly advanced, ancient financial technique known as not treating the stock market like a Las Vegas casino. The true test of their strategies came on a random Thursday afternoon when the market suddenly dipped by 2%. In Gary's apartment, alarms were blaring. Sirens echoed from his computer speakers. Laser hamster coin was tanking. Gary screamed, scrambled under his desk, and violently unplugged his computer from the wall, operating under the frantic logic that if his monitors were off, the stocks couldn't legally go down. Meanwhile, Chloe's phone buzzed with a push notification. Market dips 2%. She glanced at the screen, shrugged, and smiled. "Oh, stocks are on sale today," she muttered. She tapped one button to authorize a transfer, put her phone away, and went right back to pruning her fern. The next week, the two met at a local coffee shop. Gary looked like a raccoon that had fallen into a washing machine. Chloe looked like she had just returned from a spa retreat. After listening to Gary ramble about the potato company and the hamster coin, Chloe slid her latte to the side and delivered an intervention that every aspiring trader needs to hear. Chloe's 3 rules for not going broke. The narrator notes that Chloe laid out 3 non-negotiable rules for Gary, turning his chaotic gambling into an actual plan. Rule number 1. Have an entry and exit plan before you buy. "Gary, you buy things because of panic or hype," Chloe explained. "When you buy an asset, you need to know exactly why you are buying it, what your target price is to take a profit, and at what price you will cut your losses if things go south. If you don't have a mathematical plan before your money leaves your bank account, you aren't trading. You're gambling with extra steps." Rule number 2. Diversify or diversify. Gary had a habit of putting his entire rent check into a single meme stock. If that one company failed, he was eating instant ramen for a decade. Chloe explained that spreading money across different companies, industries, and asset classes, like using index funds, acts as a financial safety net. If the tech sector takes a hit, your healthcare or consumer goods stocks can hold you up. Rule number 3. Emotion is the enemy of wealth. When the market drops, amateurs get scared and panic sell at the absolute bottom. When the market is booming, they get FOMO, fear of missing out, and buy at the absolute peak. A good trading plan takes the emotion out of the equation, Chloe said. Set a strategy, automate your investments, stick to the math, and step away from the monitors. The bottom line. Gary stared at the napkin where he had been scribbling Chloe's advice. Plan your trades. Diversify. Don't trade on emotion. And, crucially, stop taking financial advice from pigeons. Make sense? Chloe asked. Gary nodded slowly. Yeah, it does. Hey, can I borrow $5 for a coffee? My portfolio is currently worth 38 cents. Chloe rolled her eyes and handed him a $5 bill. The ultimate lesson of Gary and Chloe is simple. The stock market is an incredible tool for building long-term wealth, but it is entirely unforgiving to the unprepared. If you don't build a structured, emotionless plan, you will eventually be the one asking your friends for coffee money.